Hello SST members, Brock here with lesson 6. Today we're going to be going over ascending triangles, which is a very bullish pattern, and descending triangles, which is a very bearish pattern. Ascending triangle. An ascending triangle is a bullish formation that usually forms during an uptrend as a continuation pattern. There are instances when ascending triangles form as reversal patterns at the end of a downtrend, but they are typically continuation patterns. Regardless of where they form, ascending triangles are bullish patterns that indicate accumulation. So just 5 things to keep in mind here. One is a trend. It has to have, the actual trend has to be visible, which you need at least two pieces of the trend, which I'm going to talk about here in the next photo. The next thing to keep in mind is the top horizontal line, which will be viewed upon as a red line in the photo that I have here in the next slide. And the third thing is a lower ascending trend line. 4 is duration, which can last anywhere between 2 to 3 weeks to 3 months. And volume. Volume should be descending as this trend pattern is coming along. So as you can see here, the left side you have a green bar, which is the base of the triangle. The red bar, which goes horizontally across, is the horizontal bar that has to be kept for this pattern to be continuation. And the blue line right there, the blue bar of the triangle, is the ascending trend line. The thing to keep in mind is higher lows with the ascending trend line, the blue line on the bottom. Now if you look towards the bottom here underneath volume, you can see that the volume overall between April and June, this is a pattern over a few months here, has declined until the breakout point. And the breakout point is where you can see where the red line on top and the ascending trend line on the bottom of the triangle are coming to meet. And this should be very identical to the symmetrical triangle that we talked about in lesson 5. But with this, a bullish pattern is very noticeable because a symmetrical triangle keeps sort of a neutral pattern. This one, it keeps an aggressive bullish pattern. And you can see every time it comes down onto the ascending trend line, the blue line on the bottom, it quickly rebounds back up and it hits that top horizontal bar line. So what we can look for as traders here, momentum traders, we can look to bounce off this ascending line, but a key thing you got to keep this in mind is that it's going to become less and less and less. But the gold here is at the very end of the pattern. That's where you want to jump in, and that's where it breaks through, and you're going to get big gains right there at the end of it. Now moving on, descending triangle. This is a very bearish pattern. A bearish chart pattern used in technical analysis that is created by drawing one trend line that connects a series of lower highs and a second trend line that has historically proven to be a strong level of support. Traders watch for a move below support as it suggests that a downward momentum is building. Once the breakdown occurs, traders enter into short positions and aggressively push the price of the asset lower. Short positions are positions that we'll be talking about in a different lesson, but short positions are basically you profit because you predict that the stock is actually going to go down. So you fill into a position knowing that the price of the stock will go down, and then you fill your position back and capture in profits. We'll talk about this in a further lesson here, but the thing to keep in mind is descending triangle patterns and basically what to stay away from if you're not getting into short positions, or if you have no interest in getting into any short positions. Okay, this is DuPont Co. here. This happened between about 2 or 3 months, and as you can see on this one, the red bar is the base of the line, and the descending is the top blue bar. And just to keep this is basically the opposite of an ascending triangle. The thing to keep in mind is the bottom support line. It needs to hold that support for the pattern to be in play, and when it reaches the top blue bar, it should have lower highs, and once again it should sort of come into a squeezing effect towards the end of the triangle, and what you're looking for right there is the break point, in which, you know, if you had short positions, you could fill your short positions and gain in a lot of profit there. But typically a stock that if you're not, like I said, if you're not getting into any short positions, stock that you would stay away from. So that's it on ascending and descending triangles. I know this was a pretty short video lesson. If you guys have any questions, just log on to the website, www.strategicstocktraders.com, and shoot me an email or shoot me a text or give me a phone call, whatever you guys need. Okay? Good luck and happy trading.